The Personal Finance Executive Summary, February 12, 2014. Welcome to Personal Finance. Special Update: Taming the Bear. Due to the recent market volatility, today's episode is dedicated to how to protect your money during times of turbulence. John Persinos, Managing Director of Personal Finance, has put together a list of recommendations for every investor.
The time to buy is when there's blood in the streets. Attributed to the 18th century financier Baron Rothschild, this colorful and often repeated euphemism means that investors, in the midst of a severe market downturn, should seek inherently strong stocks that have been unfairly driven down in price by the irrational fear of the crowd. If carnage were to suddenly hit Wall Street, what would you do? When investors see red, you should see opportunity. Now, don't get us wrong. As we head into 2014, we're not predicting an imminent market bloodbath. Today's market is overbought for sure and due for a pullback, but a full-blown correction doesn't appear to be in the cards. But many stocks now hover in overvalued territory. A market pullback on the magnitude of, say, 5% could suddenly hit at any time. In the meantime, you must be prepared for the inevitable ups and downs. Here are 5 ways to cope with a substantial market drop. Number 1, do nothing. When in doubt, doing nothing is often your best bet. Many investors act imprudently, they act rashly, too hastily, and they almost always do the wrong thing. Control your emotions and see how events pan out. To quote an old Wall Street adage, never sell into the market weakness. Number 2, if you haven't already, diversify your holdings. Maybe your own analysis tells you that legitimate reasons are behind the decline, say a genuinely lousy corporate earnings season that's combined with a big spike in applications for unemployment insurance. If that's the case, you're justified in taking modest action. Ideally, you're already at least partially protected by diversification. If not, then increase your diversification among various categories. Number 3. Remember your goals and keep your eye on the long-term horizon. Chances are you're saving for retirement or for another long-range goal. With that in mind, keep your eye on the long game. Number 4, make minor modifications to your allocations. Make minor, repeat minor adjustments to your portfolio allocations. For example, if your current allocation is, say, 60% stocks and stocks suddenly tanked, consider reducing your stock allocation to, say, 50%. And making up the difference in bonds. Number 5, sell overpriced cyclicals. If the crash is related to underlying economic conditions, consider selling only those cyclical stocks that are the weakest. Restrict your selling to cyclicals that are overpriced and vulnerable to further drops. In the final analysis, whatever the market does, don't panic and throw your investment strategy out the window. Stick to your original goals. This is John Persinos, Editorial Director of Personal Finance and its parent website, Investing.
This is also a good time to think about your retirement finances. With more and more senior citizens in the workforce and adequate retirement savings in dangerous decline, this issue has never been more relevant than right now. Do you have enough set aside? And if so, is it invested correctly? We've identified one very specific and incredibly effective way to grow your retirement wealth. Please click the link next to this video to find out more. And thank you so much for watching the Executive Summary of Personal Finance.